Okay, everybody, welcome to today's, I'm going to call it a lunch and learn. My name is Steve Weibel. I'm here with Credit Suite to talk to you about 9 business loans secured with collateral that you can get for your business. Don't forget, grab your free business financing guide at creditsuite.com/live-27. I got my official airline headset on. I'm ready to taxi this jet down the runway. Who's ready to take off and learn a little something today? All right, grab your peanut butter and jelly sandwich, grab your little box of orange juice. Oh, God, that's disgusting. Whatever you're going to have for lunch, sit back, enjoy. I promise you, just like Ty, I go through these quick. Moving on. Please give us a little love. Go down below, give us some like. If you're on our YouTube channel, go ahead and subscribe to our channel. Click the little bell so you get notified when we have new videos. If you're on Facebook, give us some love, give us some hearts. We appreciate you all being here today. And don't forget, my crack team of social media managers is here to answer any and all your questions here in the comment section. However, if you just want a quick phone call, you want to talk to one of our experts that are here to help you out, call us at 877-600-2487. All right, we're taxiing down the runway. Let's go ahead and take off. All right, first of all, I'm not Ty. Ty actually is dealing with some high-level business today. He asked me to step in, and you know I love being here with you. My name is Steve Weibel. I'm the key account manager here at Credit Suite. You can reach out to us anytime you want. info@creditsuite.com. So what is collateral, right? Really, what is collateral, right? I know it sounds like a really simple question. Well, according to Investopedia, collateral is an asset that a lender accepts as security for a loan. Collateral may take the form of real estate or other kinds of assets depending on the purpose of the loan. The collateral acts kind of as a form of protection for that lender. That is, if the borrower defaults on their loan payments, the lender can seize the collateral and sell it to recoup some or all of its losses. No different than if you have a mortgage. You understand when they put a note on your property, that's basically their ability to take your property if you don't pay the loan. Very simple. It's exactly what collateral is if we want to simplify it. So here are some examples of collateral-based funding. Option 1, inventory financing. All of those of you out there who own stores or anything along those lines, this is a perfect fit for you. Inventory financing is a revolving line of credit or a short-term loan. Right? It's used for a company to purchase products for resale. The products serve as collateral for the loan. For example, if you had a hardware store and you wanted to get a line of credit or a short-term loan against that inventory, you could do that. Right? So that's something that has real intrinsic value to the lender. There are some other qualifications, however. All right, there are some restrictions of the type of inventory you can actually use. Can't use cannabis, alcohol, firearms, etc., or perishable goods. And that would make sense, right? I got a warehouse full of bananas. I want to borrow $500,000 against. A week later, my air conditioner goes and the bananas are worthless. The lender's out of luck, right? So it can't be a perishable good. Cannot be cannabis, alcohol, firearms, etc. If you're not sure, you can certainly reach out to us at 877-600. 877-600-2487. You can talk to our finance team and we can give you a little more details on that, okay? Don't forget, get approved for credit lines and loans. Go to creditsuite.com/getfunding. If you're not sure, check in the links. We'll put the link there for you right now. There may also be a revenue requirement with inventory financing and a minimum FICO score requirement, okay? Now, they're all going to vary a little bit different. Some could be as low as 5 figures, some could be as high as 7 figures. But again, it's going to depend on the type of product, the lender that we're talking about. They're all going to have their own varying restrictions. But it really is a good opportunity, especially if you have a store. This is actually perfect. Or you guys know, I always like to talk about my printing business, right? So paper inventory, right? Paper technically wasn't really perishable. I guess it had a shelf life. I never found out. But I would carry $1 million in paper and inventory. So certainly I could borrow money against that inventory. Hope that makes sense to you. If it does, give us a little thumbs up, give us some hearts. All right. Option 2, Kickfurther. It's a combination of inventory financing and crowdfunding. For those of you who are familiar with crowdfunding, you get financing from customers and brand supporters and then fundraise directly to them. Customers buy through what's called a consignment opportunity and end up owning the products they help fund until they're sold by the brand. So it's a way of getting crowdfunding that are actually buying your supplies. Pretty cool, right? So they'll actually own the product. Then when you sell that, you pay it back. Obviously, you're taking the profits. They're paid back, all right? As soon as the product sells, the customer earns payments. Also offers an online store for businesses to market and sell their products. So if you're with Kickfurther, not only will they help fund your inventory, they'll even give you an online store to help sell the products, right? So they want to get paid back as quickly as possible too. So they give you another outlet to sell your products. It's possible to get funding for up to $2 million in inventory. $2 million. There are some terms and qualifications. Let's dive into those real quick. Payback terms will vary. You submit your sales reports and provide payment for inventory sold at the end of the sales period, whatever that sales period is that they choose. You're going to have to provide statements for that. You are required to provide a monthly accounting of current inventory levels, which makes sense, right? They're investing money for your inventory as you're selling that inventory off. They want to make sure they get paid back. That's why you have to provide that monthly inventory. No different. Anybody who knows anything about car dealerships, they have what they call a lot loan. They call it something else, but it's basically where they're funding the autos on the showroom floor and out in the parking lot. And as those autos sell, you need to be paying back the loan. So they require a monthly inventory. All right. So speaking of autos, that brings me up to equipment, right? So there's equipment financing, right? We're talking about collateralized financing here. So equipment is a perfect example of collateralized financing. You can use a loan or lease to purchase or borrow hard assets for your business. Everything from vehicles to construction equipment, printing equipment, you have printing presses, anything along those lines. You will pay a predictable amount every single month. Terms for equipment financing through Credit Suite are as follows. So we offer this. If you want to find out, call us at 877-600-2487 or go grab your free business financing guide at creditsuite.com/live-27. All right. So in order to qualify for equipment financing, companies must have at least 1 year in business. You can get approved even with challenge credit. No financials are required. All right. Approvals take as little as 24 hours. For equipment leasing, you can also lease equipment rather than buy it outright. Often it's going to be a lot less money down, and you may be able to negotiate much more flexible terms. It's easy to upgrade equipment after your lease ends too, so that has some real flexibility for you. The terms of qualifying for this is pretty simple through Credit Suite. You can get approved with as low as a 640 personal credit score, which is fairly low. Lenders will require details on the equipment you're getting and do a quick credit review. All right. So that's leasing versus financing. All right. Then there's the equipment sale leaseback version. This is if you already own your equipment. So let's say you have, I'm just going to use tractor trailer as an example. You can actually use that as collateral for financing. You can sell it and lease it back, right? You sell the equipment to a lender for cash, and then you lease it back from them, effectively getting all your money now and then paying monthly payments to pay it back. It unlocks Section 179 tax savings, and you depreciate your entire equipment purchase in the first year. This is not a bad gig, right? You think about that. So you got a piece of equipment and it's still working fine. It's in great shape. You need a little more cash in the bank because maybe you want to expand. You can lease that equipment. You can sell that equipment, lease it back, get all those tax write-offs during the first year, and then expand your business. This is a beautiful opportunity. It's called the Equipment Sale Leaseback. If you're not sure, reach out to us, 877-600-2487. So you're interested in finding out about the Equipment Sale Leaseback program. All right. There are some terms and qualifying conditions. Terms and links and the amount you can finance will certainly vary. You need at least one large piece of higher value equipment to qualify. Please don't call with your bicycle. Okay. It's got to be high-end equipment. It's got to be something that's some real intrinsic value. All right. In general, a lender wants to be sure your equipment does not have any liens against it. That's the very first thing you're going to want to check. Right. All right. On with more collateralized financing. 401k. I know most of you heard of this, right? This is not a loan. You will not have to pay an early withdrawal fee. You will not have to pay a tax penalty. You put the money back by contributing just like any other 401k program, right? So it's not going to change your life in any way. Again, it's not a loan. You're not paying a withdrawal fee or tax penalty. You won't lose your retirement funds. This is 401k financing. There are some little tricky things to it. It's called a 401k rollover for working capital program. The IRS calls it a ROBS, or a rollover for business startups. Per the IRS, a ROBS qualified plan is a separate entity with its own set of requirements. Okay, the plan, not the individual, owns the trade or business through its company's stock investments. Some filing exceptions for individuals may not apply to such a plan. All right, some filing exceptions for individuals may not apply for such a plan. Yeah, that's true. This is not a loan, so there's absolutely zero interest to pay. All right. There are some qualifying conditions. You're going to get low rates, often less than 5%. Your 401k is going to have more than $35,000 in it, more than $35,000. And you can often get up to 100% of what's a rollable amount. All right. The lender will want to see a copy of your two most recent 401k statements. And you can get 401k financing even with severely challenged personal credit. So those of you who've maybe had a rough time the last couple of years, you've got a 401k, it's pretty well funded, this would be a great opportunity to you for even startup funding. Okay. You get a 401k financing even with severely challenged personal credit. The 401k you use cannot be from a business where you are currently employed. So you can't be currently contributing to it through a current employer. It's got to be an older one where you no longer work there, right? Must be from an older employment. You cannot be currently contributing to it. All right. Then we've got option 7. This is IRA financing, which is a little bit different. You can invest a portion of your retirement funds into your business. This gives you way more control over the performance of your retirement plan assets. Matter of fact, what in the real estate world, everybody uses, a lot of people use them, self-directed IRAs. That's the whole point of it. All right. And it gives you the working capital you need for business growth. So with IRA financing, there are, again, certain terms and qualifying conditions. You got to work with a CPA to help you roll over a non-contributing and qualifying account. Keywords I said there, non-contributing and qualifying account. All right. This allows you to cash out of half or $50,000, whichever is lower. So you are capped on what you can get. Half of what the value is or $50,000, whichever is lower. If applicable, the CPA you work with will structure a self-directed IRA for the remaining funds. All right. Then we have stock financing. How are we doing on time? Oh, we're crushing it today. You're probably not even halfway done your peanut butter and jelly sandwich yet, are you? All right. Stocks financing. Some lenders will make loans using securities as collateral. All right. Securities-based lending provides ready access to capital. The only restrictions to this kind of lending are other securities-based transactions like buying shares or repaying a margin loan. In other words, you can't have a margin loan to buy shares and then go try and borrow money against that when you've already got a loan against it going in. All right. You continue to earn interest on the stock's pledges collateral, which is great. So you're not losing anything there. Closing and funding takes less than 3 weeks. Rates could be as low as 1.6%, and challenged personal credit is definitely not a problem when it comes to this because they are certainly collateralized here. There is no issues with this. This is for stock financing. Now, there are going to be some minimums that they're going to require owning a minimum amount of stock. Don't call us with one share of Coca-Cola unless it's one share from like 1907. But other than that, yeah, you're going to want to have a minimum amount. I'm not going to share that with you today. You can talk to us at 877-600-2487. All right, moving on to bonds financing. I don't own any bonds, but I know a lot of people do. Security-based lending for bonds is offered through large financial institutions and private banks, typically to make a large business acquisition or used to execute a very large transaction like maybe a real estate purchase. Lenders determine the value of the loan based on the borrower's investment portfolio. Most investment grade corporate treasury, municipal, government agency bonds, they're all accepted. These are all investment grade. That's an important key term here. All right. You keep all the interest and appreciation from your securities. The lender will require a copy of your 2 most recent security statements. All right. That's for bond financing. Bonus, SBA 7A. The SBA makes lending decisions, but qualified lenders may be granted authority to make credit decisions without an SBA review. The maximum amount on offer is $5 million. All right. The SBA requires that loan be collateralized to the maximum extent possible up to the loan amount if that amount is over $350,000. Key word there. Over $350,000. All right. Then we have the SBA 504. It's a little bit different. This is an economic development loan program that provides approved small businesses with long-term fixed rate financing meant to be used to buy fixed assets for expansion and or modernization. All right, businesses can buy currently existing buildings, construct new buildings, more. It's almost unlimited what you can do with an SBA 504. As a matter of fact, in general, the SBA provides 40% of total project costs and the lender covers up to 50% thereafter. All right. The borrower contributes 10% of the project cost. So if you're building a $1 million project, you're going to need to contribute $100,000 to that. The lender will give about $500,000 and the SBA will provide the other 40% or $400,000. The borrower may be required to contribute up to 20% of the total project cost in certain situations. You're obviously going to want to talk to the lender on that. Okay. Another bonus, term loans. Big banks only sign off on a fraction of the small business loan applications that come their way. Anybody who's followed us last week know that I talked about this very specific thing. It's only about 25%, right? While term loans often have lower interest rates and higher loan amounts, the company's banks end up funding have very strong financials and near perfect credit scores. All right. You will most likely have to undergo a personal credit check. I don't even call it a personal credit check. I call it a colonoscopy for personal credit. Like they're going to dive deep, right? Don't laugh. I know you're eating lunch. Probably shouldn't have said that. These kinds of loans may require collateral. In most cases, they actually do. So to recap, collateral is any asset that a lender can use to recoup loss should the borrower default. Don't leave yet. Equipment, inventory, retirement funds, etc., other investments, buildings, real estate, and more can be used as collateral. If you want more information, please see the presentation description below. While you're down there, give us a thumbs up, give us a love. I'm going to stop right here because we're going to dive into what we're going to cover next. I want to touch on uncollateralized loans. I know we're talking about collateralized loans. Let's talk about business credit. Right? Let's talk about what type of credit you can get without collateralizing, without personal guarantees, just based on your business alone. This is good for startups through 20-year-old corporations. If you're unsure what I'm talking about, take a look at our channel, go to our YouTube, go to our Facebook page. We're everywhere, but most certainly reach out to us at 877-600-2487. Talk to one of my experts. We're happy to take a look and see what your profile looks like right now, give you some direction, talk to you about our program, take you to the next level. One of the things we talked about today was equipment financing. You can actually get equipment without a personal guarantee if you build your business credit profile. There's certain types of equipment. Anybody who buys a vehicle can certainly do that. If you're unsure, again, reach out to us, 877-600-2487. Talk to one of my team. They're there waiting for you. Go to creditsuite.com. Go to info@creditsuite.com. Type in the chat. Give us some love down below. Just find a way. Reach out to us, 877-600-2487. Next time, we're going to cover what you need to know about business bank accounts, right? What do you really need to know about business bank accounts, including why you need one, duh, right? How to find one, this is key. All right, and some options for getting the absolute best deal. Don't forget, easily and quickly get any and all financing, get access to every legitimate funding program in one place. You pay us no fees ever for funding. Use our loan volume to get lower rates and fees. Plus, we have the business blueprint to graduate to the SBA loans. Those SBA loans we were talking about, you want to get there, build your business credit. 877-600-2487. Never look for funding again. Thanks so much for having me here today. Hopefully I got done before you finished your peanut butter and jelly sandwich, and certainly before you finished the orange juice that you're drinking with it. My name's Steve Weibel. Again, reach out to us, 877-600-2487. We will see you again next time.